Can you make money on pocket option? Before embarking on the journey of options trading, it's crucial to understand the stark realities. Contrary to popular belief, options trading is not a shortcut to wealth. In fact, statistics paint a grim picture. A staggering 90% of retail options traders lose money. This alarming figure underscores the complexities and risks associated with this financial instrument. The allure of options lies in their potential for substantial returns. With a relatively small investment, traders can control a large amount of underlying asset, such as a stock or index. This leverage can amplify both gains and losses. However, this double-edged sword can be a treacherous path for those who lack proper knowledge and discipline. One of the primary challenges in options trading is the time-sensitive nature of contracts. Each option has an expiration date, and if not exercised by that time, it becomes worthless. This adds an extra layer of pressure and can lead to impulsive decisions. Moreover, options prices are influenced by various factors, including the underlying asset's price, time to expiration, volatility, and interest rates. Understanding these dynamics is essential for successful trading. While options trading presents significant risks, there are also opportunities for those who approach it with caution and a sound strategy. One common approach is to focus on selling options, also known as writing. By selling call options, traders can collect a premium upfront. If the underlying asset's price stays below the strike price, they keep the premium. However, if the price rises above the strike price, they are obligated to sell the asset at the strike price, potentially incurring a loss. Another strategy involves buying options, which can be used to speculate on price movements. For example, a trader might buy a call option if they believe the underlying asset's price will rise. If the price increases above the strike price, they can exercise the option and profit from the difference. However, if the price remains below the strike price, the option expires worthless, resulting in a loss. It's important to note that options trading is not a passive investment. It requires active management, constant monitoring, and a deep understanding of market dynamics. Successful traders often employ risk management techniques, such as setting stop-loss orders to limit potential losses. Additionally, they conduct thorough research and analysis to identify potential trading opportunities. In conclusion, while options trading can offer the potential for substantial returns, it's a complex and risky endeavor. The majority of retail traders lose money, emphasizing the importance of education, discipline, and a sound strategy. Before venturing into this arena, it's crucial to weigh the risks and rewards carefully and consider whether it aligns with your financial goals and risk tolerance.